So how does your funds enhance their engagement and satisfaction, from the passive investor's perspective? I know you're saying you give them access to the broad spectrum of deals. So I'm assuming not necessarily these deals are applicable to one sponsor either. It could be multiple sponsors that they have
Multiple sponsors, multiple asset classes. Fantastic question, Vinki. So let me tell you how the passive investor benefits. Multiple ways. The first thing is they go to a single portal. They're not going to multiple accounts. They get a single login. Just like a stock brokerage account, they'll see how each individual investment is doing. We already talked about the virtual cash balance, right? It makes it much easier for them to deposit money regularly on a periodic intervals, maybe every $5,000 every month.
Real Estate Vibe Show, and I'm your host, Vinki Loomba. Today, I have a very special guest, Badri Malinur, a very good friend of mine. Welcome, Badri.
Hey, good to be back, Vinki. It's been a while. I think I did a podcast with you a couple of years back, and fabulous to see how well you have grown.
I know. Yeah, it was when we were beginning the podcast, and it was more like on the spiritual side of the podcast. And thanks for coming again. And I would love to hear your story. And I'm super excited to see your growth trajectory. So in this episode, like I mentioned, Badri has joined us. He's a co-founder and VP at Avestor Inc., avestorinc.com. That's the name of their platform. It's a tech platform revolutionizing sponsor-driven private fund creation with a vast investment background covering real estate, stocks, crypto, and more. Badri's leadership, including Fortune 500 management and his dual MBA and computer science masters, bring a unique perspective to this discussion. Today, we'll discuss empowering sponsors and investors through customizable funds. So before we dig deep into it, I really wanted to understand from you, if you can provide some insight to my listeners as well, kind of overview, what exactly is customizable fund and how is different from the traditional fund models
or
investment vehicles?
Great question. So let me kind of get started by giving an analogy which most people are aware of. A lot of people invest in mutual funds, right? Or an ETF, I would think, right? Not everybody invests in the stock market. So imagine if you could go to Fidelity and say, I like your mutual fund, but I like this 15 stocks in the fund, and I don't like this other 8 stocks in the fund. Obviously, you cannot do that. That is the kind of power we are bringing to with customizable funds, where passive investors, let's start with passive investors. If you keep passive investors happy, sponsors are happy, syndicators are happy. You start with the base. I mean, you keep the investors happy, then everything else automatically flows through. Passive investors have the ability within a fund to pick and choose which deal they want. So we are really trying to bring the stock brokerage type of experience to passive investing. So they can come in and say, I want to put $30,000 in this multifamily deal in Texas. I want to put $25,000 in the senior living in Arkansas, and they can build custom portfolios. So that is what a customizable fund offers to a passive investor. Let's start with that there.
Oh, okay. So I love that model. They're not, delegating or putting the all $100,000 into one deal. They can just put it in multiple deals. But the question arises here, isn't that at that point that the deal sponsor has to have more deals in that fund? How does that work?
So yes and no. So a deal sponsor can have just one deal if at times they have multiple deals, right? So if they don't have multiple deals, that's okay. So you are still offering them a deal every month, or if all you're doing is one deal every couple of years, a customizable fund doesn't make any sense. You do a simple syndication and you're done with it, right? So, but if you are planning to do a deal every month or two, then investors can come in and they can make a choice decide if they want to invest in that deal or not, and then wait for the next deal. It's like you can have a deal of the week or a deal of the month. There are a couple of important points I should make. Customizable funds, as you know, is part of the Avestor platform. We are the ones who introduced that to the world, so to speak. The first company to introduce customizable funds. And so far, truly customizable funds, we are the only ones. What we offer also is a steady access to deals. So we negotiate with top tier sponsors and they offer preferred terms to Avestor fund managers. So do not think of this as only for deals which you are doing physically, where you are owning the real estate, you're doing the syndication. You can be raising money for a variety of asset classes, all within one fund from a variety of sponsors. So it's not very hard for you to present a stream of deals. And in fact, we make it very easy for you. We preload the deals. You as a fund manager obviously will have to evaluate the deals, do the underwriting, but we make it very, very easy for you to present it to the investors.
So let me ask you this question. You said if you have only one deal in the bucket, so it might not be advisable at that point to have this fund.
If you do only one deal every year or two.
Every year, or maybe every quarter.
You're building a business, right? I mean, if all you're doing is a hobby where you're doing one deal every 2 years, a fund doesn't make sense. You do a SPV or just go raise money for somebody else and then it's fine.
Yeah, but the question arises, even you're doing a one deal every quarter, which people do like 3-4 deals a year, that's common base ground for everybody. So in that respect, how this fund is different than the syndication process, and why would somebody opt in for the Avestor?
Yeah, good question. There are multiple reasons why it's different. Initially I had talked about it from a passive investor perspective, but let's talk about it from a sponsor or a syndication perspective. So basically, when you're doing a syndication, it's not a very scalable process. So let's step back a little bit. There are only two choices, right? If you're doing a syndication to start with, you're either doing your own deals or you're raising money for others. I mean, legally, of course, where you're taking on additional co-GP responsibilities and everything else.
Yeah, but that's your deal too by the end of the day, because you're plugging in as a GP in the deal.
You don't have to do that if you're a fund of funds manager. So we'll get to what a customizable fund is. There are significant problems with that model. So let's start with, we have to segment different people. I'm sure your audience is segmented too. There are some sponsors who do their own deals. Let's talk about that for a couple of minutes. And then we'll go to people who are raising capital for others. We'll talk about that for a couple of minutes. And then we'll see what fund of funds or customizable funds offer for both of them. And we'll talk about blind funds and customizable funds. So we'll give you a wealth of information here. So jump in here anytime with any questions. Yeah,
sure.
So let's start with, I know you don't do a lot of your own deals, but there are several people who find the property, they're running the property, and they're running the syndication. And what is the problem with that? It's not a very scalable model. You have to do the PPM for it. You have to do the Reg D filings. You have to do the blue sky filings for the deal. And then you have to do separate accounting, separate taxes, separate large number of LLCs. So think about it. If you do 4 syndication deals a year, and let's say you get investors from 10 states, that is 40 blue sky filings per year. And blue sky filings can cost, for those of you who are not familiar with blue sky filings for your viewers, it's something you have to do for each state, where you register with the state when you get the first investor from that state. And so 40 times blue sky filings can cost anywhere from $200 to $1,000. You're spending, that's not a very scalable way to build a business. So that is something which customizable funds solve from a sponsor who's doing his own deals perspective. It's one PPM, one blue sky filing at the fund level, less accounting, less taxes, less number of LLCs, and you save anywhere from 40 to 70% even if you do 2 or 3 deals a year. And this is not a hypothetical number. We actually have built a calculator. Vinki, I can't tell you how many people say, hey, this sounds expensive. Where am I saving money? As soon as they see the calculator, all objections are gone. They see the hard numbers and they can see that it makes sense, without me having to explain why it makes sense. Numbers don't lie, right? So now let me pause here for a second and let me go to the second segment, and then I'll pause to see if you have any questions.
Yeah, let me throw in one question in here for you. So when you take this model, you're doing all the paperwork, all the blue sky filing for them, and then it's just like a fund structure has been created. So would you consider that as an ongoing SPV model, because they can plug into any deal as an SPV?
Exactly. Think of it
and
like an evergreen
SPV they're not paying individually every time, creating multiple SPV vehicles. I would like you to incorporate that into your next answer.
Absolutely. They're not creating multiple SPVs. Think of this as an evergreen SPV or evergreen syndication. Now, again, let's distinguish between an SPV and a syndication. A syndication is people doing their own deals. Yeah. And SPV is somebody like a capital raiser who's raising money for others, and they're negotiating preferred terms. Let me ask you a question. Why would people create an SPV as opposed to going to the deal sponsor directly? What do you think is the reason?
Because a lot of people, they just don't want it to share the investor base.
Exactly. So the reason capital raisers, I don't like that term, but it's used widely in the industry, create an SPV is for multiple reasons. One, you're not exposing your investors to the main GP. I can't tell you how many people have come to me and said that, the main GP has started marketing to our investors. It might be intentional, it might not be intentional. But what do you think your biggest asset is as a capital raiser? Your investors. Once one investor goes, now you have lost a lifetime series of earnings, right? If they start investing directly with other sponsors, right? So that's why capital raisers create an SPV. And another reason is you really want to create SPVs where you direct all your investors to one portal as opposed to sending them to multiple portals. If you're just part of the co-GP, then you're just sending them to multiple portals. There are multiple reasons for doing all of this. And whatever I said before about a syndication still applies. Because an SPV is similar to a syndication. You still have to do the PPN. You still have to do the blue sky filing. You still have to create a separate LLC, a separate accounting, separate taxes. And now let me answer your question. Exactly like how a customizable fund solves it for syndications, customizable funds solve it for the SPV model as well. It's I liked your analogy. Think of it like an evergreen SPV. And how long does it take you to do an SPV now, Vinki? I mean, take a guess. You probably
I don't know. Maybe I think it depends upon deal to deal, because sometimes when we're working a deal and we have our own attorney and they can just spin out a SPV in a couple of days. And if you're gonna go do it on your own, it might take you anywhere from 2 to 4, 6 weeks, something like that.
Exactly. Even the couple of days, you still have to do the Reg D filings and everything else. But how about if you can add a deal within 25 minutes in the 20 minutes in the portal? That's exactly what you're doing.
That's amazing.
With this customizable fund, you decide to raise for a deal. You don't even have to create an SPV. You just put the deal up. I mean, we'll even preload the deal for you. We'll give you marketing emails to send out about the deal. By the way, we give a free copy of Go High Level CRM. I don't know if I mentioned that. So all of this is preloaded. So you can really experiment with different deals and say, hey, am I getting any soft commits for this? I'm not getting much. So let me not do this deal, So that is the power of a customizable fund. It completely streamlines the process where you can add a deal within minutes, 20 minutes, 30 minutes, whatever. Let's not quibble between 10 or 15 minutes here. All the time it takes you to upload the deal. And then you can test the investors' waters in an unprecedented way. And what is also more important is now you're transforming the relationship you have with your investors. Why is that the case? Because today you're selling them one deal at a time. You're not building a holistic advisor type of a relationship. Whereas here, you can help each investor build a custom portfolio, taking into their account, do they have the kid? I know you had a wedding in the family. I mean, do they plan for some weddings? Do they have a kid going to college? So you can take their holistic financial picture into account and help them build a portfolio which suits their needs, which completely transforms the relationship you have with them. Now, can I guarantee you that they'll come to you for the next deal? Probably not, but at least they will check with you before they go to somebody else for the next deal. When you build that kind of a holistic relationship.
Interesting. And how about the liquidity in this kind of fund? Is it like more liquid compared to the?
It is not. It is not. Think of it like a stock brokerage account. You set a fund level minimum and you set a deal level minimum. You can say, we have more than 100 funds in our platform, so I won't get into the details of each one of them. Each one has different deal and fund minimums. but let's pick a typical case. So to invest, you have to put $50,000 minimum into the customizable fund. It's like you put the money in a stock brokerage account when you open it. And then maybe you have a deal level minimum of $10,000. Once you invest in a deal, it's like investing in a syndication or an SPV. You have to wait until the money comes back. So there is no liquidity, secondary liquidity, in the sense that you can sell that to somebody else. We might add that as an option in the future with a blockchain implementation, but that's not there right now. But here is a very, very important point for you as a fund manager. We have something called a virtual cash balance. Today, let me ask you a question. You have done a lot of deals. You're an experienced operator. When a distribution comes in, what do you do with it? I hope you're sending it to your investors.
Yeah, we send it to the investors through ACH.
To ACH, right? So what we do is we have this virtual cash balance. So just like a stock brokerage account, it sits in the virtual cash balance. And what that allows you to do, and by the way, it's linked with ACH to their bank account, but they have to ask for your permission before withdrawing it. So all the distributions go into the virtual cash balance. If let's say a deal exits and you get 150% return, whatever it is, that money goes into the virtual cash balance and it accumulates, and they have to ask for your permission to withdraw it. And at that point, you can say, hey, Joe, I see you're withdrawing the money. Are you sure you want to do that? I have this great multifamily deal coming up in Texas, or pick your favorite state, though a lot of people seem to be going to Texas these days. And do you want to invest that $20,000 in another deal? I can tell you from experience, we ran our own fund to test out the customizable fund. Less than 3% of the liquidation distributions gets withdrawn. People just keep reinvesting. It's human inertia. Without having to sign another 40-page PPM and without having to withdraw the money, create a wire, create ACHs, if you can just click and invest in a new deal in a matter of seconds, what do you think you would prefer? Now, of course, if you need the money, you'll take it. But most people don't need the money. If you're offering them a steady stream of deals, they're very likely to invest in your next deal.
Interesting. So let me ask you one more question over here. I'm not sure if you have that feature, but
Sure.
if you don't, you might want to think about it. Since you've
Sure.
been talking about the stock market the whole time, trying to compare your customizable fund platform to the stock market. So stock market, they do have like TD Ameritrade or, Charles Schwab or all these brokerage houses, they have something called leverage, whatever you're putting in the account, they give you the leverage. You can use that too, and then multiply. So do you have that feature built into your platform too? Or are you looking to build that feature?
No, there are a lot of,
I won't talking about the virtual funds.
Sorry, go ahead. I wouldn't want to get into the details, but leverage in private equity is very hard to use. I mean, there are legal rules. It's not that easy to use. And what happens if it goes bad? With leverage, always comes risk. Trust me, I've run an option fund which involves index trading options. I've done multiple leverages. Things go right, no problem. But guess what happened in the 2020 crisis? The volatility index hit 70 or 80. And then who's giving the additional money? So you really can't use leverage in private equity investments beyond the leverage you get from taking the debt itself. So.
So let's go back to our passive investors. So how does your funds enhance their engagement and satisfaction, from the passive investors' perspective? I know you're saying you give them access to the broad spectrum of deals. So I'm assuming not necessarily these deals are applicable to one sponsor either. It could be multiple sponsors
multiple sponsors, multiple asset classes. Fantastic question, Vinki. So let me tell you how the passive investor benefits. Multiple ways. The first thing is they go to a single portal. They're not going to multiple accounts. They get a single login, just like a stock brokerage account. They'll see how each individual investment is doing. We already talked about the virtual cash balance, right? It makes it much easier for them to deposit money regularly on a periodic intervals, maybe every $5,000 every month. And when money comes in, it sits in the virtual cash balance. It makes it much easier to deploy. Third point, they don't sign a 40-page PPM every time they invest in a new deal. I mean, who really enjoys signing a 40-page PPM for every deal if they're just putting 5, 10, 20,000? And what we do is you sign a PPM once, And then you sign a small disclosure document, which is much smaller, which highlights what is different. Here is the secret of the matter. I mean, it's not so secret. Everybody knows it. 90% of the PPM is the same. So why make people go through that 90% of the PPM, which is the same, as opposed to focusing on the matters which are really different in this deal? So we have, after talking to half a dozen SEC attorneys, we have developed something called a deal disclosure document, which highlights what is different about this deal. So it's a 2 or 3 page document which investors can sign, as opposed to signing a 40-page document. So that is point number 4, right? So point number 5, tell me who enjoys getting 10 K1s at tax time, except maybe your accountant. So even if they invest in 10 different deals, they get a single K1. So I can't tell you how many people are so pleased with that. I mean, saying, I hate getting multiple K1s, forwarding it. Accountants charge. Yes, accountants do it, but nobody wants to deal with it. Point number 6, investors love the idea of building a custom portfolio. So where they can come in and say, I need a liquidity event in 2 or 3 years. So let me invest in a 3-year deal. And there is a Streamlined platform which shows them their liquidity, not guaranteed in real estate, of course. But it shows them when in 2024 you're expected to get this money, 2025 you're expected to get this money. So all these points make the passive investor experience in a customizable fund nothing short of incredible. I mean, this is not my words. These are the feedback which we have got from not only our passive investors, but passive investors from other people who have created funds in our platform.
I'm going to go back to my question earlier, or your question actually, when you asked me, why do people do the SPV model? Because they wanted to kind of secure their investor database. They don't want it to share their investors. I just think I'm going to say that out loudly here, because the investors who invest with you, they're looking for some kind of personalized service. They do not necessarily leave you just because somebody else is pitching the deal to them. That's their loyalty too.
You have to build that relationship.
Yeah, exactly. Yes. No matter how much the other deal sponsors, they do try, whether known or unknown to you, they do try to reach out to your investors all the time, which is a bad practice. People shouldn't do that. But even if they try, if you're loyal to your investors, they're loyal to you. They're not going anywhere. But in this Avestor platform now, you said there's a whole spectrum of deals, there's a whole spectrum of operators there, and people have a choice, right? So in that scenario, how would somebody protect their investors? Because they have a choice. They are looking at this platform, multiple deals available. These are all the shining objects. They are attracted. Okay, let me invest here. Let me try this operator versus this operator. So what is the line of delineation over there for the different operators, or how they're securing their investors?
Great question. I think that's an excellent question, which probably is in the minds of several sponsors, right? I want you to separate out Avestor, the platform, from Avestor, the brand which we offer to you as an sponsor. So when your investors log in, they see 0 other funds. They don't see any other deals except for the deals which you choose to expose to the investors. Now, people can Google Avestor, they can go to our marketplace, but they can Google anything else. So there is no direct link. Our portal is branded in your name, and the investors will see only the deals you choose to expose through the investors. And I do want to comment on one other point you brought. Absolutely. It's not... if being a fund manager is about building a relationship, understanding what type of needs the investors have. But another very important point, you can do this, to be fair, with both the SPV model and the fund of funds. It is your job as a fund manager or an SPV manager to ensure that your investors are not missing out by going through you. What do I mean by that? And we help with that in Avestor. We negotiate with sponsors. So maybe their end investors are getting a 70-30 split, 8% pref, 70-30 split typical, or maybe 60-40. And we negotiate, maybe we get a 9% pref and an 85-15 split. So that is part of the power of the 100+ fund managers in the Avestor community. So even if the investors do go directly, they may get the same deal or a worse deal than going through you as a fund manager. So we are really trying to set up the fund managers for success and the passive investors for success. So it's a win-win-win. The sponsor wins because they're getting $1 million check from one fund manager or a $500,000 fund manager. And then the passive investor wins because they've streamlined all their operations. They're trusting one fund manager and they have a single portal, single K1. And then you win because you're making money in the differential and it's a win-win-win situation. That's what fund of funds is all about.
So enhancing your progress as well. So I think this is a good conversation. We talk about the introduction. We also touch a little bit on that diversification, right? Because you can invest in multiple asset classes too. And then also flexibility for the sponsors because you're not doing any blue sky filing yourself or the PPMs or any taxation implication. Everything has been taken care of by you guys. And also, you're enhancing your progress by using this Avestor portal. So let's talk about some of the risk. How do you manage the risk, or are there any risks involved using your platform?
There are no risks involved in using our platform, but there is always risk in investing in a syndication deal. So I don't want to give you the impression that just by using our platform, the risk of investing in syndication goes away. Of course not. So we are very transparent in our offerings. So at any day, you can export all the data from a customizable fund. In terms of a risk, and if you want to move to another platform, but then there's nobody else who's built it to the depth and the integration with accounting and taxes we have. So there is no additional risk in using in a customizable fund. And if not, there are a bunch of benefits. But all the risks of investing in private equity and private real estate, of course, are translated in this deal as well.
So another question I wanted to ask you about the transparency and the communication, how the communication happens on the Avestor portal. Can the deal sponsor or the operators, they can communicate directly through Avestor, or how easy to use the platform all in all, like, how user-friendly is it?
It's extremely easy to use. We have had a new next generation UI just released last month. People have really appreciate the next generation user experience we have released. And so if you get any project updates from the sponsor, you just record it. Investors can log in, they can click on a button and see what updates are there from the sponsor. We also integrate with all the various major CRMs. Everyone uses different CRMs. To be very clear, we have not built a full-fledged CRM within Avestor. We don't intend to, because we'll never have the 200 engineers HubSpot has, or a high-level development team will have. So we have integrated with CRMs, and then you can use that for mass communication. But if you're just providing updates and things like that, you can easily do that in a very relatively easy to use fashion. So.
Okay, so CRM is a little bit different than the investor portal.
Correct.
I was going to ask you this question earlier when we were talking, I forgot, but since you brought it up, let me ask you this. How different Avestor portal is from the other investor portals, like, Syndication Pro or Cash Pro or InvestNext?
See, I think the answer to that is you're not comparing apples and oranges. You're comparing apples and gorillas. I don't know, make up something. So our value proposition is not to compete with these folks at all. Our entire focus is on customizable funds, and we have 3 planks in our strategy. There is the technology piece, a unique legal structure, and a tightly integrated platform with customizable funds with accounting and taxes and everything else. We have a tight services component. That's a very important point, actually. We are not just providing the platform, unlike the other folks. We provide all the services associated with it, the legal, the regulatory, the accounting, the taxes, marketing collateral, a full-fledged CRM. We have the deepest background checking in KYC and AML checks, basic checks. And we recently announced a platform where we have the deepest background checks in the industry for people you want to partner with. You won't do that for every investor. This is what is used by police departments, and it gives you access to real-time data. And we have accreditation checks, ACH, documentation, DocuSign, all of that is integrated. I know some of this done with the other portals. So I told you 3 planks. One is the platform and the technology and the legal infrastructure, the technology behind it. 2 is the services, we just talked about it. And the 3rd plank is the mastermind and the membership model. So we have a mastermind. We meet every Tuesday. There is a ton of deal sharing going on. There is discussions of fund strategies. People cross-invest in each other's deals. External sponsors come in and present and give preferred terms to Avestor fund managers. We discuss how the concepts of a pitch deck. So there are all these three components which we have tied together to provide a completely unique value proposition to help you do everything to market, launch, and scale your fund. And the most important point I want to stress is don't think of this as a fund. That is the most important point. The word fund scares people off. Think of it as a better and more efficient way to do your syndication deals or SPVs. When I say syndication, I'm using SPVs and syndications interchangeably.
Interesting. I like that, what you said. So, but I do have one follow-up question for you.
Sure.
So when all these people on your portal, these operators, do they use Avestor portal alongside Investor portal and the CRM?
Not at all. Not at all. They use Avestor portal for all their things, and they do use a CRM. We give a free copy of high-level CRM. Many of them use that, but some of them use other products, HubSpot, ActiveCampaign. So we 100%, there is sometimes competition spreads rumors saying that when you need this, you need another portal. Absolutely not. This is a 100% replacement. The portal is a small piece of what we offer. It's less than 20% of what we offer, the value proposition. People don't come to us just for the portal. It's a great experience. We have redefined the user experience, but that's just a small piece of what we offer.
Interesting. So any challenges or anything that you're facing in the current market?
The market has slowed down. I think everyone knows that.
Yeah.
And I think there is periods of huge opportunity coming up. People are buying products, multifamily deals at 20% discount, 25% discount. And but investors are getting a little wary. So the funds are growing at a slightly lower pace than what we had projected, but they are growing and we are rapidly adding funds. So from an investor experience, is really how to keep up with the demand of all the funds which are coming on board rather than a lack of demand, So.
Right. I would like you to take a minute and kind of share with me, since we met first time and you invested in one deal with me, how things have transpired for you guys. You have grown exponentially from there onwards. It's like upward trajectory. So take a minute and just give us kind of an overview, kind of a case study kind of thing,
Sure.
So here you are investing in my deal, and here you have 150 of your own, other operators working alongside with you guys.
Sure. To answer your question properly, I should talk a little bit about the evolution of Avestor. We wanted to revolutionize private equity investing. Real estate is one asset class. By the way, we have people investing in startups now in Avestor. Judgment liens, phenomenal asset class.
Mm-hmm.
So we built a platform which completely transforms the investor relationship. Okay. Having said that, we didn't want other fund managers to be guinea pigs. People are just beginning to build support for customizable funds, but we did that 4 years back, and we went through 2 full accounting life cycles before we opened it to other fund managers. I want you to understand the difference. We had our own fund,
exactly,
which is what we used to invest in your deal. I think that's when we talked more than 2 years back.
Mm-hmm.
But we wanted to, there is tremendous complexity. We have spent tens of man years for the taxes and the accounting part of it. Generating a single K1 is non-trivial. Other people say they have customizable funds, but they don't generate a single K1. A customizable fund is not one without just putting a bunch of deals together is not a customizable fund. So after we did that and we went through 2 full accounting life cycles, that's when we opened it to other fund managers. And we have grown far beyond our original projections. And like I said, I think we plan to have a few hundred funds by end of next year.
Great. Oh my God, that's such a good conversation today, Badri. We can keep on going on, but we are out of time. So I'm going to ask you one last question over here.
Sure.
Please share with me something that I didn't have enough knowledge to ask you. I might have missed on so many things. So share with me more that I missed asking you.
I think you did a great job in covering everything. You was very exhaustive. You covered the passive investor perspective. You covered the sponsor syndicator perspective. We covered the capital raiser perspective. So I think you did a great job. Nothing comes to mind, to be honest.
Okay, thank you. So share one golden nugget with my audience.
Building a portfolio is a marathon. It's not a sprint. And there are 3 key elements. I think your audience knows this, but hey, we really got to repeat this as stewards of other people's financial capital. Asset allocation. Mm-hmm. Don't put all your eggs in one basket. Mm-hmm. Related to that is diversification. You want to invest in things which zig when other things zag, and tax efficiency. Whenever you build a portfolio, that's a favorite hobby of mine, because I don't know if you mentioned this in the introduction. I've invested in every single asset class you can think of. Options, I've invested in 35 startups. I've invested in venture funds, cryptos, commodities, bonds. And asset allocation is the single most important wealth building tool you can think of. So diversify, be tax efficient, and think of what asset allocation you want to go into, and stick to that asset allocation goal and rebalance every year. And don't go after every shiny object. That's the piece of advice I have for people who are building their portfolios.
I agree with you 100%. So this brings us to our rapid fire round. I'm going to ask 5 questions. You have to answer in 1 word or 1 sentence only. Are you ready?
Okay, let's do it.
All right. So first question is, what is one of the most important things that you have learned in your life? And how did your life change after learning it?
I'll just do it in 2 words: integrity and hard work.
Nice. That's a good one. So share 1 good book that you really like and wanted to recommend it to my audience.
Principles by Ray Dalio. It will transform your life, and it will transform your financial portfolio acumen.
Yeah, change your mindset. I love that. In 1 word, what does life mean to you?
Balance between self, community, family, and business.
I love that. My zodiac sign is Libra, so I'm always kind of balancing.
That's good. That's good.
What is your biggest passion?
Travel. I want to go to every country in the world. I probably won't accomplish that, but we are about 70 countries right now. 70, 75 countries. So we'll see. There are some countries which are not safe to go to, but yeah.
Lot more to see, like 156 countries to visit, right? In a lifetime.
Who's that?
More? It's 156 countries, right?
No, I think they're close to 190 countries, actually.
It's more? I thought it was 156.
You might be right. I should know that. If that's a goal of mine, I should know that, right?
Yeah, it's my goal too. We share the similar goals. I love to travel. If you could turn back in time, my last question, if you could turn back in time and talk to your younger self, what would you tell yourself and why?
Take more risks. And I spent almost a couple of decades in corporate life, and I wish I had not done that. I did try to start a company in my 20s. It didn't really take off. So I spent a fair amount of time in corporate life. In retrospect, I should have quit corporate life 15 years before I did. But I'm glad I quit it when I did.
That's good. That's a good answer. I like that. So how can people reach out to you?
Yeah. I would love to chat. Doesn't matter if you want to chat about Avestor or customizable funds or just financial portfolio. You want to just chat about asset classes. The best way to reach out to me is by email. I'm also available on LinkedIn, Badri Malinor. I'm thinking that you'll share some of the contact information in your podcast.
Definitely.
The email is badri@avestorinc.com. BADRI@AVESTORINC.com. That would be the best way to reach out to me.
Thanks, Badri. I really enjoyed our conversation today.
Thank you, Vinki. It's awesome. It's always good to come back. And congratulations on the really nice podcast you have built.
Thanks.